You know, if you've ever done any research on Google with respect to rental real estate, you've probably run across land trust at least 2 or 3 times. And that's because the land trust is such a valuable tool for real estate investors, especially for people who own rental real estate that is encumbered by a mortgage. The land trust can provide several benefits for you, and I just want to touch on one that I think is really important for people who own rental real estate that is encumbered, because this tool could mean the difference between having your property be forced into refinance or keeping it away from your lenders. Now, as you know, when you borrow money to buy property, you have to sign a mortgage agreement, a loan agreement, and in that agreement, if you read it, it typically states that if you ever transfer title to property, the lender has the right to accelerate your note. Now, this could be a problem if you put property out of your name directly into a limited liability company, if we moved it directly in like that. If the property's deeded in and the lender finds out about the fact that this property is now held in your LLC, if they discover that, then they can force you to refinance your property. Now, the problem that we have right now is that many people have they have these loans at 4.5% interest or 5% interest, historically low rates. Well, if interest rates start to climb, and now the average interest rate now is somewhere around 8%, what do you think is going to happen? Lenders will be incentivized to go out there and find people who've taken their rental real estate, put it into a limited liability company for asset protection, knock on their door and say, "Excuse me, sir, you have violated the acceleration clause in your mortgage. We're going to force you now to refinance that property at this higher 8% rate. You're going to have to do it or pay off the property." So rather than put yourself in that situation, my recommendation to you is to utilize a time-tested tool to avoid the due on sale clause. And that time-tested tool is the land trust. And the reason it works this way is because Congress carved out a specific exemption in the Internal Revenue Code for people who utilize land trust. Actually, what I'm referring to here is the Garn-St. Germain Depository Act of 1982. You see, what happened was that in the late 70s, we had this rapid rise in interest rates. And people who had set up grantor trust, which is the same as a land trust, to protect their real estate from probate, were forced to refinance out of a 3.5%, 4% mortgage into a 12 or 13% mortgage because lenders asserted you violated the acceleration clause, the due on sale clause in your mortgage. So now you have to refinance at these much higher rates. Well, Congress stepped in, and with the Garn-St. Germain Act, they prohibited lenders from accelerating notes when property is moved into a grantor trust. Now, what I assert to you is let's take advantage of that. If we know that lenders do not accelerate notes when they're held in grantor trusts, let's put our encumbered real estate into grantor trusts to ensure that when interest rates do go up, we've got our assets protected and we don't have to worry about the lender accelerating the note. And so it works as follows. So when you have property that's encumbered by a mortgage, what you'll do is you'll first create a land trust. Now, this land trust offers zero asset protection for you. So that's why we don't just stop at the land trust. You're going to be the trustee, or you could use a nominee trustee, and that's for a different segment. And you're going to be what's called the beneficiary, Benny. And you're the trustee up here as well. Now, you will deed your house. So here's my house. I'm going to deed it into my land trust like that. Put my house in the title of the trust. We call this, I like to use the property address. Let's say it's the 13 Olive Way Trust, just like that. That's what would be on title now, 13 Olive Way Trust. It's encumbered by a mortgage. That's fine. It can still be encumbered by a mortgage when it goes in there. Lenders aren't going to care because they're going to make an assumption that you created this trust for estate planning purposes, which most people do. They have living trusts for estate planning. However, that's their assumption. That's not our problem. In reality, we're just setting this up as a mechanism in order to move our property into an LLC without alerting lenders to the fact that that property's been moved somewhere other than this trust. You see, this is the only thing that gets recorded. The deed transferring the real estate from your name into the trust name. That's the only thing that hits a public record. This trust document, it's not recorded anywhere. This is your private document. No one knows who's involved in this trust. All they see is the trustee and the name of the trust on the public record at the county recorder's office. Now, This trust is different than a living trust. With a living trust, things don't happen until you die. With a land trust, things can happen while you're alive because a trust is drafted in a very specific manner. It gives you the ability to transfer your ownership interest to anyone you want or anything, any entity. So here's what we do. We create a limited liability company here. Okay, now going back to the example where you create the LLCs, let's say this property is located in Washington. All right, so maybe we got a Washington LLC set up right here. We then take our beneficial interest and we move it into the LLC. And well, actually, if you're setting it up right, I'm not going to put you as the member of the LLC because let's just stick with the way we had it. You should have this LLC owned by your Wyoming LLC, like that, and then you own that down there. So that LLC is owned there. So we move this land trust into this LLC through what is referred to as an assignment. That is, I, Clint Coons, hereby assign 100% of my beneficial interest in the 13 Olive Way Trust to the Washington ABC LLC. By filing that assignment, when I say filing, I mean by signing the assignment and having it notarized, you've now established the fact that this land trust is no longer owned by you. It's owned by this Washington LLC, and the land trust owns the property. Now, the purpose of this type of structuring is to ensure that we can take mortgage property, get the protections of an LLC without alerting the bank the fact that we've done that. Now, I mean get the protections of the LLC. With a land trust, since it doesn't provide asset protection, if a tenant brings an action against this property, in every state besides Florida, the creditor of this house who gets a judgment against this trust can then go after the beneficiary. So if it was you, they can go after you. But I don't want you in that position because the whole purpose of going through all this is to create asset protection for ourselves. So what we're going to do is we're going to put that beneficial interest in the LLC so they go here and then boom, right down to the LLC, and that's where it stops. So I've often run into investors before, they'll say, well, Clint, I heard you talk about having this structure here with the multiple LLCs, one per property. Why don't I just do this? Why don't I just create multiple land trusts and put all those land trusts in one LLC, and then I save myself the hassle of having multiple LLCs? Well, the answer is if you did that, all of these trusts could be taken in the event of this one lawsuit because the land trust doesn't offer asset protection from the claims that happen on the inside, nor does it offer any asset protection from claims that happen on the outside. So if you owned a land trust in your own name, you're the sole beneficiary of that trust, and someone brought a claim against you, they get a judgment against you for $200,000, they're going to ask you, what do you own? You tell them you have a beneficial interest in a trust, they'll take it from you. So you need to protect your land trust with an LLC. And so for real estate investors, this is actually a very powerful tool that is utilized by a lot of real estate investors in order to move real estate into limited liability companies without being concerned about the due on sale clause. Now there's other benefits as well on using this. Transfer taxes is a big one. Okay, so if you're in Florida and you have debt on the property, if you move debt encumbered real estate into an LLC, it's a taxable event. However, if you use a land trust, you avoid that tax. So I've run into issues before. Well, actually, I'll give you an example. A good friend of mine, he's an attorney in the town where I live in Gig Harbor, Washington, and he worked with a client of his that's local that owned property in Florida. He set them up with an LLC, transferred their property into the LLC for asset protection. Now, what occurred is a year and a half later, his client received a bill from the county. They said, when you transfer this property in, it was encumbered by a mortgage. That means you have to pay us tax, a doc stamps on that transfer. And the tax, I think, amounted to $2,200. And so my friend called me up. He said, Clint, my client just got a bill for $2,200. Is this real? Can they tax you? I said, yes, they can. Yes, they will. And that's your bill now if you haven't figured it out yet, because I'm assuming the client's going to want you to pay it because you didn't realize that in Florida, you can't transfer encumbered real estate into an LLC without using a land trust if you want to avoid that tax. Now, this happens in other counties as well, Shelby County in Tennessee. And I'm throwing these out because I invest in certain areas. In Clark County in Las Vegas, it can happen as well. Not only going in, but when you want to pull it out. Let's say you got property inside of an LLC. You didn't use the land trust. And I got it in there. So land trusts also work for unencumbered real estate as well, especially if you have transfer taxes there. If I had an LLC set up here and I had a house and I pull it out to myself because I need to refinance it because the lender's not going to refinance it in the name of the LLC, well, I could be hit with a transfer tax at the county level. But if I had it in a land trust, I can just quietly move that land trust into my own name, just through an assignment, now from an assignment from the LLC to Clint, and then I can pull it out of the land trust myself, put it in my own name, and it wouldn't result in a taxable transfer. Now, there are two notable exemptions to this in certain states, and those are things that we can go into when we talk about land trust, if we ever get into that in more detail. But I just want you to understand that there's a lot of other benefits that come from using a land trust. You can also use anonymity, take it to a little different level as well with land trust, where you can use similar strategy here, but use a nominee trustee. If you had the ability to run my name through every county in this country, you would probably sit back and think, wow, Clint is an avid real estate investor. Look at all the trusts that he has set up for himself and all the property that he owns. Well, in reality, that's my client's property. I'm there as the nominee trustee. I'm there to help them get their property out of their name and protect it from prying eyes, like you if you were running an asset search on them. You wouldn't know that they're actually the ones that own it. So land trust has multiple uses for a real estate investor, but most notably, it's a crucial tool if you have encumbered real estate. This is something you need to become familiar with. And it's not something that you should be doing on your own. I can just tell you that from firsthand experience of dealing with people that have created problems for themselves on these transfers by creating title issues and not understanding how to title the property properly into the land trust, not setting up the assignment the correct way. So it's something you definitely want to work with a professional on, somebody who has experience in utilizing these tools and putting them into LLCs for asset protection.